last night. But last night I got in, well, we had some flash floods here in Utah. And needless to say, futures do not look good this Wednesday morning. We could have a couple 100-point drop or maybe even a percent drop today in our stock markets. And I was supposed to do this last night, so let's just go through what I have and what I was going to go through with you last night. Again, I do apologize. We had some flash floods here in Utah, and I was trying to do the best I can to really save my basement from being flooded with mud. Kind of ridiculous, but that's the way that it was for me. So here we go. Welcome to the Hurley Investments Final Service Commentary for Wednesday morning, actually the 10th. Our futures look horrible. I mean, in all honesty, it just looks bad. And that's going to help me because, as I go through a couple things here with you this morning, in all honesty, if you ask what's happening this week, this is the week before earnings season technically starts. We also will start the first of 3 weeks for financial earning reports. At the end of this week, if I can take a quick peek, we're going to have JP Morgan, Wells Fargo, Citigroup, and PNC. It'll be a rather large week, or the start of our banking earnings. In fact, I'm trying to get to them. Let's see if I don't have them already in here. There we go. We have Delta. We also have Western Boots Alliance, JP Morgan, Wells Fargo, Citigroup, and PNC. It will be a pretty busy end of the week. So I'll be honest with you, I'm a little bit shocked to see how much we have by way of what's happening here in our stock market. I wouldn't expect so much to be happening, especially this morning. But that does bring me to the fact of what I do. If the stock market's down 500 points, 1,000 points, I collar trade to make up some of the downward movement. And really, it comes down to, you guys, just a little bit of common sense here. Think about what you might say or do. I'm sorry, I'm going to try to get, well, I guess I'm not going to get it in there. But just think about a little bit about what you might say or do if some things are really coming to hit the fan. What I mean by that is, how am I going to say it? I wish I could predict the future, but if I can't, and I know it's a fool's game to try to outguess the market, right? It's a fool's game to outguess the market timing. This is where a lot of people talk about, oh, I want monthly income. You can't predict what the market's going to do to you. It is what it is. It can be pretty bad sometimes. So the short answer is I collar trade, and it really comes back down to the story of the dollar. And the story of the dollar is pretty easy. If you have a dollar and it goes up 50 cents, excuse me, it goes up 50%, it goes down 50%, how much is that dollar worth? Again, one more time. If your dollar goes up 50%, right? That means that dollar is going to be up to $1.50. And then if it goes down 50%, that means it's only worth 75 cents on a 0% return. Someday people are going to understand. Someday people are going to go, percentages aren't my friend. Percentages are not going to help me out. And with that, we'll do the best we can. That's the short answer. But in all honesty, percentages are not your friend. And you've got to take a quick peek at things and look at things maybe a little bit differently. It worries me. I guess the short answer is there are a lot of things that worry me in our stock market. And I don't know. I look at futures this morning and it would be foolish for me not to tell you that I think we're in some trouble. I think we're in some trouble, and that I am worried about what we're going to see in our stock market today. Volatility is really, really, really kicking up. Volatility is not looking good. In fact, our volatility is making me, and I'm trying to find some of the stocks I trade. The volatility has me pretty worried. It really does. I am not excited on the volatility that I'm looking at right now. And actually, I just had Kiev text me and go, uh-oh. Not sure yet, Kiev, on what's happening. So, I collar trade. I buy insurance. I buy insurance on that dollar. So if it goes down 50%, I can still sell it at $1. It might cost me 4%. So my dollar may be able to be worth 96. And then if we get a run up 75 cents and I buy insurance again, cost me 4 cents, maybe my dollar might actually be worth $1.60. It's how you save your butt in the stock market. It's kind of common sense. It's where I'm probably the first and only financial analyst that's going to tell you, I don't know what happens every single time. And it scares me. It scares me on where our markets could go. I am a belief that we could have a pretty big correction. And obviously that correction would not be helpful for our stock markets. The only financial news that we have yesterday was that NFIB Small Business Optimism Index came in at 107. So I'm going to do that again. NFIB Small Business Index came in at 107.9 versus an estimated 109. Little bit light. This morning, it looks like our inflation, the PPI and core PPI, are in line. Wholesale inventories will come out here in a bit. We should also see the MBA MBA. That is M as in Mary, the mortgage business. Mortgages come through and where they're at. But things don't look good, to be honest with you. Things look like a pretty big drop. And I am mostly protected with long puts preparatory for earnings. So next Wednesday, Alcoa reports. And if you start to do a little bit of research, you're going to see, and I don't have all of these, but Apple reports around the 1st of November. American Outdoor Brand Corp will report around the 6th of December. Alibaba is confirmed on the 2nd of November. Bank of America is next Monday. That's when I trade. So I have protection on Bank of America for next Monday. And I'm pretty sure I have 29 November 23rd long puts that give me the right to sell Bank of America at 29. Disney reports the 1st of November. Ford is on the 24th, so that's 2 weeks away. Facebook is on the 30th, end of October. Freeport McMoran I don't have. I think it's on the 24th, 25th. Mosaic is also on the 25th. Marvel is on November 29th. Red Hat's on December sometime. Under Armour is towards the end of the month of October. Visa is on the 24th, and Zions Bank is on the 22nd of October. So we have some earnings coming up that I'm prepping myself for by having long puts in place. If we talked about what's happened this week and why, not a whole lot, but I will tell you this. Most of the time I like to give a little idea of where markets are going to go. And I'm the first one today to say I don't have a clue. I don't have a clue. Volatility is ridiculous. We are still, if we look at our chart, and this is a Monday chart, I'm sorry I haven't put new ones in, but we've got a couple day drop the end of last week. We are still technically bullish. With that said, today could give us our crossovers, on the RSI and as well as the 5 and 20, whatever you're going to use for simple moving averages. We do have support at 25,968, the 50-day simple moving average. The scary part is we look like we could go down and test that today. We look like, well, maybe not test it, be 100 points above it, but we don't look really good today. We just start getting our crossovers, and we're bearish today, but we have support, and it stopped there on Monday at the 50-day simple moving average. Unfortunately, actually, as I take a quick peek, we are going to break the 50-day simple moving average this morning. So do watch it. Maybe we come down today and bounce back up tomorrow. Maybe it's a day that we finish down 290 points, or start 290 points in the morning and come back throughout the day. We do look like we're breaking, and obviously the NASDAQ is bearish because we're right on that 50 line, on the 20 line. Take a peek at this. I mean, we are so close to being oversold. I don't know. Futures don't look good today. But if we have a big down day today, watch for a bounce within the next couple days on the NASDAQ. NASDAQ's been hit pretty good. This is when I'm looking at a chart that I'm thinking, hey, we've got a buying opportunity in the next couple days. maybe next week. Maybe I'll let 2 or 3 days to let some things shake out, and off we go for a buying opportunity as our market goes on sale. I've put that our market is going to be up 1.5%. I'm seriously doubting it this morning. Maybe the sell-off that I would have expected in September might come through here in October. Again, nothing really big on earnings. Economic reports are pretty tame for this week. It's our inflation. How am I looking to trade? I got fearful and put long puts on everything starting last Wednesday. So, obviously, if we take a look at last week, yesterday's down day, although it wasn't as bad as, Thursday and Friday of last week. I'm in protection positions. I'm looking at ways to go. I do want to trade the EWZ. I'm looking at Brazil's elections and trying to find a way to capture that. I will probably be doing some type of strangle straddle. That way I can capture any big movement. They'll probably go through their first election and have a runoff. Why? I don't have the names in front of me, but it's pretty interesting. I found a really cool article, The Dogs of the World, and it's just some understanding of the emerging markets. I spoke last week about how the world is on fire outside of the U.S. This is Europe. This is the emerging market index. They are getting crushed. It is just unbelievable. The stronger our dollar is, the weaker and the more trouble Europe is when they take out their loans in dollars. I would just suggest you do some reading here on the emerging markets, understand what our effect of interest rates have and just how beat up some other markets are. I have a very interesting article on Ron Paul, and mathematically he is correct that we could have a 50% drop and there is no way to prevent it. It's really amazing because I've told you, if we back out our stimulus, if we've gone through 9 quarters with year-over-year lower growth, yet our market's up, over this 4-year period, 86%, you've got to watch out for what's happening in our market. We are built on quantitative easing. We're built on stimulus. We're built on trying to fix some of the financial regulatory things that are wrong, but none of it addresses the problem. For me, being a small-time registered investment advisor, all I have is just more work to do. I just have more work, more paperwork. It's really pretty ridiculous. So, pretty interesting article that I suggest you read. His numbers seem to be really right on track, and it's just backing out the stimulus. If you go through the financial markets obsessing and why, pretty interesting articles on some things on that 30-year. We hear about how the 10-year Treasury note is back above 3%. There's some talk that's going to get up to 3.5. Finished on Monday here at 3.24. It backed off that a little bit, but man, huge moves, and explains why people are reserved about the bond rates. It really comes down to the federal funds rate. The third time this year that's been hiked. It increases the cost of borrowing. It increases fixed mortgage rates. There's quite a bit here that's very interesting to look at. Corporate bond rates, 30-year fixed mortgage rates, credit card annual percentage rates, auto loans, student loans, personal loans, savings interest rates. Pretty important to see where that 30-year fixed, where the 10-year rate has an impact on other parts of our economy. These ETFs are the biggest winners when interest rates are climbing. Just something for you guys to be able to run off to. Pretty interesting to see it. Do you go through that? These are the areas of the stock market where investors should be when interest rates are rising. just giving you some sectors. It doesn't mean everything always works every time. These are some ETFs that you can look at. I usually don't trade too many ETFs, but I have been in the XLF for quite some time. For me, the XLE, the XLF are something that I would, for most, the easiest way to trade them is go a couple strikes out and do a leap short call, where I can take a big credit in and, for all intensive purposes, make some good money on a yearly basis and have a good credit for protection on the way down. Obviously, I'm in Bank of America, usually supposed to be pretty good through a raising interest rate environment. JP Morgan is a little bit expensive for me. Citigroup's not bad though, if you're looking at getting into some other banking stocks. Worst performers, there are some of these in here. I thought it was Coke. It looks like it's utilities, but this is actually a little bit different. Sorry. Thanks, stocks are coming down. Opportunity to buy some of these stocks in a couple weeks here. I think it's actually next week on Tuesday. We have Netflix that reports. Amazon's getting hit. Facebook's already been beat up. Alphabet or Google not doing all that well. In fact, Google's down almost 10% from its highs. And hey, look, time to get into Facebook. And that's all I have for you. I do apologize again for not being around for you last night. I went through some flash floods, just trying to out of the basement, fill up with mud and water. Guys, have a wonderful evening. Wonderful day today. Again, hopefully you had a wonderful evening last night. Buckle up. Things don't look good. In fact, we're looking at a pretty worrisome trading day today. Maybe we have a 500-point drop. Maybe we'll have 1,000 points for the week. Look for that capitulation. Look for maybe where you see some irrational selling, or you see 100-point drops in the Dow. That usually is a point of capitulation where people throw in their hand, sell off, and you'll have an opportunity to get some stocks at a pretty good price. I will see you guys next week. Again, have a wonderful day as we survive this wild and wacky Wednesday. Again, futures right now don't look good at all, and we'll see where we end up. Talk to you next week. Have a good day, and we'll see how we survive this market today. Bye-bye.